What's going to drive markets? One name, Allianz. They announced the first ever share buyback. That's as Europe's biggest insurer reported a 23% rise in fourth quarter profit. The company also plans to spend €3 billion on a repurchase of shares. This over the next 12 months. We have the CFO from Munich. It is Dieter Wemmer. Dieter, thank you so much for joining me. Well done. The market is already enthusiastic about your set of numbers. The share buyback, sir, and the rise in the dividend. Is this the stage set for more share buybacks and higher dividends at Allianz? Welcome to the show.
Yeah, good morning. Thank you for inviting me, and also thank you for the question. Yes, we had another very good year, 4% rise in dividend over last year, fifth rise in dividend in a row. The share buyback is something we have put into the room 3 years ago, that we would up to 3 billion return to shareholders, what we have now announced. I think our strong balance sheet allows a lot of flexibility going forward, and that is what we have also put in our press release, that we will keep capital management more flexible. And that is not yet said that we do the next share buyback soon, but we have the flexibility if we want to do so, but also we will look what strategic opportunities might come up in the market.
You've taken me straight to the next question. You see, with that share buyback and what you've just said to me, my question is, do you still see the opportunity to do a big, friendly deal? Is that still the determination of Allianz, despite the share buyback?
I think the determination of Allianz is to deliver on our renewal agenda, our 2018 strategic targets. We have it completely in our hands to do it in-house organically. If on the way any opportunistic deal could help us to even deliver more to our shareholders, why not? So it is something we can do, but is not on our list.
It's not on your immediate list. Dieter, this is the question. Financials are in a sweet spot. Stocks are rising. Valuations are rising. I just wonder, if you look at the world where you might see the best opportunity, would it be in the US, where you potentially are seeing a more favorable Trump administration, a rolling back of regulation? Would you be more tempted to look towards the United States for an acquisition than you would be within Europe?
Well, we are already in total income very strong in the US. Roughly 35% of our total profit comes from our asset manager, Pimco, the Allianz Global Investors, and in particular our life business in the US. So I think we are well positioned to benefit from any positive developments for the financial service industry in the US. Our weak spot in the US is currently the P&C business, but I would never speculate, because in the P&C business we could go for consolidation in every market, and it would everywhere suit our strategy.
That would suit your strategy. You mentioned Pimco, the first inflows since 2013. Obviously, Jackie Hunt taking to the helm there. And there's a coalescing. Things have improved. But my question to you is this. 2017 is going to be a bumpy ride in the bond markets. How assured are you of continued inflows with the expectation of much more volatility? I mean, some of the biggest houses don't know whether it's 2% or 4% in the bond market, and the great rotation debate. How assured are you to the market that those inflows can continue forward in 2017?
Well, I think at the moment we see still an uprise in inflows. 6 billion in fourth quarter, a little bit more than in Q3. January started very strong with further inflows, and actually I think it is a very good time for active managed credit, and hence the volatility and also the steepness or growing steepness of the interest rate curve play very much into Pimco's strengths.
Tell me, how much has flowed in January?
I think we are getting pretty close to the inflows we saw in fourth quarter.
So it's on a pro rata basis, as you saw in the fourth quarter?
No, the full fourth quarter, we made another 5 billion in January.